This will be our first market update for the year, and this video isn't going to be on ChatGPT like every other channel are currently doing.
Think Global Logistics.
So what's going to happen this year, guys? Well, we can't talk about what's going to happen without first cover off some of the macro elements at play. First obvious one, the geopolitical tensions are still very much there. It's either Russia against the world or China against the world or USA against the world. Those things do translate to real world disruptions for everyone concerned. Essentially, the net outcome of that is UK, Germany, most European countries are paying a lot more for the energy costs. Food costs have risen because obviously due to all of these global tensions, Ukraine/Russia were some of the biggest producers of foodstuffs. I think I heard yesterday USA is having a massive egg shortage as well. I think they're charging $26 US for a dozen of eggs. Those things are at play. And then we haven't touched on central banks with their raising of interest rates. Inflation is still very high. I think US is about 6.5 and the central regulators there want it to be around 3%. International trading markets and the stock markets and even crypto market have knee-jerked and responded positively, which I think is rather ill-placed because I don't feel that we're at the bottom of the market yet. So those of you who's got money that's sitting on the sidelines waiting for that opportunity to buy in, just hold off for a bit, buddy. Anyone who's jumping in too soon, I think you're going to find much of those savings will be liquidated quickly. So be very cautious, my dear viewers. We've also had central banks promising that they weren't going to raise interest rates. So a lot of the households, the young families rushing to loans and buying houses only to face repayments 2-3 times what they anticipated. The only saving grace at the moment is that most markets around the world are still fully employed, although that tide is quickly changing. We've all seen news in the US how tech companies are laying off people by the thousands. This will have a cascading effect onto other industries. There'll be more pain ahead, let's face it, okay? With that being a reality, what should you do as an international trader, be it import or export? Well, uncertainty is the norm, and you must be climatized for that. You need to look at your supply chain all the way through, from the top to the bottom, and collect data from all the people you deal with. It is only through collecting their data or understanding their predictions, understanding their trends, can you then piece together a picture as accurately as possible for your own business. The devil is in the detail. Be educated on the reality on the ground. That's the only way you can better protect your business. Because if you don't, believe me, you might not have a business for long. 2023 isn't going to be easy. Keep relationships, build relationships, be loyal during times of uncertainty. Don't chop and change because a few dollars, because those are often more false economy than real economy. Say for example, TGL is a freight forwarder. If a customer had demonstrated loyalty when times are tough, we're gonna do more for that customer to assist, right? If it means that that customer can't pay on time and needs 1 more week or 2 more extra week, we're gonna say, wow, look at your history. We're gonna grant you that extra 2 weeks because you're being loyal to us. Alternatively, that freight forwarder can bring you some business intelligence that could be seen from the market. That is worth its weight in gold. Diversify in terms of understanding your suppliers. Vietnam, Malaysia, Thailand, Indonesia. You need to discover for yourself, are those markets realistic for your needs? Because let's face it, majority of the raw materials that are required to go into these manufacturing also come from China. Diversifying out of China may not be a reality for you. Those skilled labor that exists in that market cannot be replicated overnight. They can't be replicated in 10 years, guys. By going for the cheaper dollar will end up actually costing you a lot more in the grand scheme of things. So be very cautious, guys. Generally speaking, ocean freight rates will stay low for the first half of this year. The last quarter we might see uptick due to the traditional seasons and what have you, but all of that hinges on what the central banks will do with the goddamn interest rates. Air freight will remain high for most markets. Why? Because when you pivot from over-ordering to under-ordering or just-in-time model to the lean model, you want to delay that ordering as late as possible because you want to secure bona fide sales through those orders. So you want to leave it to the last minute. but because there's going to be high volatility in the supply of capacity, because shipping lines want to play with their supply so they can keep their profit margins high, when it comes to the time when you're ready to ship that product, that vessel may not be available. You either don't ship and miss the deadline, or you go air freight. So that reality in itself is going to keep air freight very buoyant. So that's about it. I'll be sure to keep my ears on the ground, collect data, so I can bring you further market updates for you, the viewer, the international trader of goods.